Hey, everyone. Welcome to our another segment of our Facebook Live where we bring in many different content. So today we are doing something different again. As you can see, Tom, my partner and buddy, he's missing out of the action. So we have Jaden here, who's also our partner at the Toronto deal. And today he has something really, really interesting to share in the hospitality space. So my name is Dr. Noah Liu. I'm here at the one of the admins on the Facebook group, and we do this every Thursday night. And pretty much, this is our passion. This is what we like to do. We like to talk about real estate. We like to educate real estate. I like to speak to my colleagues directly. DM me, put comments, any questions, any concerns you guys may have. So without further ado, I'm going to pass the mic off to Jaden, and Jaden is going to be sharing his deal that he's currently working on in Canada. Jaden, the floor is
Yeah.
yours, man.
Th-
Go for it.
Thank you, Noel. I appreciate it. And I appreciate being on here again. I feel like I'm a regular guest at this point. I don't know if we're at like our fifth or sixth live event, but every time I'm able to come on and share
Yeah.
some of the project updates as to what we've already done and what we're doing in the future, I really, really appreciate the opportunity. So, really quickly, for those that don't know, I am a Canadian member of this group. I had met Noel and Tom, I'm going to say about a year ago. And since then, we have developed probably in between 12 and 15 million dollars worth of real estate deals in Canada. They are all zero emission, net zero, high energy efficient houses. And as such, the Canadian government has granted us incredible rebates and incentives, which brings partners that are part of this group right here great returns. So there's a lot of members, Canadian members predominantly, that have invested and are partnered with us in some of our Toronto deals. However, the deal I'm talking about today is for everybody. This is
Mm.
a North American wide deal. I'm really excited to bring the deal that I have today to the American partners that are on this page. You will be able to participate now in some Canadian investments if you're looking to diversify your portfolio. I would say mitigate and minimize your risk based on some of the government policies that we have right now surrounding real estate, and hopefully participate in some of the upside and the great returns that some of the partners that are members of this group have already participated in. So, yeah, without kind of dragging it on too long, the last time that it was on a couple of weeks ago, I talked about a hospitality play that we were in the middle of partnering up with in Canada. So I'd like to talk really, really quickly in a little bit more detail. Last time I was on, it was a bit of a teaser, but I'd like to get into the weeds a little bit more and talk about the who, talk about the where and the what, and then most importantly, I'd like to talk about the returns and how you can get involved. So a couple of weeks ago, I was approached by a very prominent Canadian businessman. If you don't mind, I'm going to share a screen in a minute
Let's do it.
here. The business partner of mine is named Amin Today. He is the founder of one of Canada's most prominent marketing and advertising companies named One Method. I'm sure any Canadian member that's on this page will know exactly who it is I'm talking about. For the American partners that don't know, I encourage you to use Google. These were the guys behind the brands like Scotiabank Arena and a little artist named Drake. So these guys come from significant money, and they are very, very big players in the hospitality space. And they are looking to answer what New York City has as the Hamptons in a place called Prince Edward County in the province of Ontario. So just about 8 hours north of New York City. In the last couple of weeks, there has been incredible publicity about this development. There has been third-party research done on this development that proves out some of our pro forma numbers. And we've actually met even with the mayor of Prince Edward County on this deal. So right now we have raised 4.5, and these are all Canadian figures, $4.5 million to date. And right now we are on a conquest to raise the remaining $3 million. Development right now is happening on phase one, and we are now raising money for phase two. So for anybody that is looking for low risk, tried, true, and proven investments, look no further than phase one of this deal and the members and the partners that have brought you this deal. Phase two is going to be a slam dunk because phase one, we've already paid for all of the infrastructure, the administration, the legal costs have already been paid for. Phase two is straight development. So the returns are absolutely incredible. So I can show you better than I can tell you, but let's get into the weeds on this hospitality play in the province of Ontario.
Let's do it.
Thank you. Thank you. Okay. I'm new to this platform, so just tell me, okay, there we go. There we go. So I am sharing with you right now a company called The One Method. The founding partner is the creative mind behind this space. One Method, again, is one of Canada's largest and most prestigious marketing and advertising companies that were behind major developments like Scotiabank Arena and the design behind Scotiabank Arena. That's where our Toronto Maple Leaf hockey team plays, and that's where all of the big acts in Canada come to play. Taylor Swift, Justin Bieber, they would all play to the Scotiabank Arena. Recently, so that's the who. The where is the next part. The where, sorry, we're getting a bit of a lag here. This is an article written by The Telegraph. For those that don't know, this is one of UK's largest publications. So when we are getting, when we're getting articles written up about our development in the UK, we know that we're making waves right now. So you'll see this heading right here. It's Canada's underrated answer to the Hamptons. Halfway between Montreal and Toronto, which are our two major subs, is this incredible neighborhood that is filled with wineries. There it is right there on a map. Filled with wineries, nature, hikes, beaches, and again, some of the top restaurants and restaurateurs out of Toronto are heading to Prince Edward County. Again, I would encourage anybody to use internet to find out a little bit more on their own. But if we talk about location in real estate, this is one of the top locations for any kind of destination, hotel, hospitality play. This is another article that's written by Toronto Life. And again, it's just highlighting, I believe, some of like the big major chefs. There's Chef Jamie Kennedy that's gone out and opened restaurants in this place. The opportunities to generate incredible income producing properties out there are limitless. However, I do want to bring a point up actually. Airbnb licenses are no longer being issued for Prince Edward County. And what's happening is they're also not allowed to be grandfathered. Let me get off this screen right now because it's a little distracting. They're not allowed to be grandfathered. So what does this mean? It means that there's a very high demand right now for people wanting to come out and visit and rent and vacation in Prince Edward County. But Airbnb licenses and short-term licensing are diminishing because they cannot be grandfathered and they cannot be passed on to purchasers of your property. So there's fewer and fewer places for Canadians and Americans alike to come and vacation in Prince Edward County. So what it's doing is it's creating a scarcity of supply and it's driving prices up. So on that note, I wanted to bring up this company right here. I believe that they're an American company, HVS. They have done a third-party study right now based on our site plan, based on our renderings, and have come back to us and told us that we are expected to have the highest cost per night in the entire region. One of our competitors is Wander. Wander right now resorts charge peak season about $1,000 a night, and we are expected to outpace that number. So what is the plan? The plan right now is a 21 unit development on land that we purchased a little over 2 years ago. So right now it's already in operation. We have 10 cabins on the site right now that's creating cash flow, but we are redeveloping them to look something like this. Very futuristic. That's our current site right now. We have 500 feet of waterfront, over 4.5 acres. 21 units is the site plan approval so far. We are in the midst right now of acquiring the neighboring property, which is phase 2. Phase 2 is where you come in. And that's where we are adding the additional 21 units for a total of 42 units. This is an aerial view of the property in Prince Edward County, where it's currently operating as a 10-unit boutique hospitality play right now, but all of the units are being updated. So I'm going to go through some graphics and then we can get into the numbers. There's the site plan showing the 10 units. We are adding an additional 10-unit motel strip right here. And then we are putting a large 4-bedroom main house here to make for 21 units total. Here are some artistic renderings and sketches of what we are planning to do. There's going to be a all-season pool put in on the water. Again, site plan approval is in place. Construction is started on phase 1. We're raising money for phase 2. We plan on having a bar, top restaurant, so it's full season. A lot of Americans are concerned about the seasonality that we get up in Ontario, but this is a hospitality play that plans on running all year long. Here's some of the designs and the renderings for our initial 21 unit development on Lake Ontario. They're striking, they're beautiful. Let me see if I can get something a little bit more substantive. There we go. Or substantial. There we go. So there's our property on East Lake. Again, this is on Lake Ontario. And we try to highlight its location to Picton and the Sandbanks, which are the two major draws and hubs in Prince Edward County. We're going to be well positioned between the two of them. So population of 27,000 people. There's 40 wineries. And I believe there are about 75 top tier restaurants currently in place as well. I know everybody likes the graphics, so I'm happy to share. What I'd like everyone to do is when you have questions or when you want some more information, please reach out to me, and I will of course mail you this package, and we will sit down with the actual partner and the creative mind behind this, and we can get into the numbers, and you can meet with our lawyers and actually find out a little bit more about the intricacies of the partnership. The cabins have an incredible design. I believe the aesthetics that they are choosing right now is one of the reasons why we are forecasted to be over $1,000 a night stay. Yeah, try not to bore you too much with the jargon or the marketing stuff. I'm happy to get into. These are really, really nice, right? Like this is all, again, this is coming from the fact that our partners are like the top restaurateurs in the city of Toronto. These are the guys behind like the biggest and hottest restaurants in one of the most major markets in North America. Again, a quick Google search of these partners' names, you'll quickly see that the partners behind this are very sophisticated. They have very, very deep pockets, and they're looking to bring on limited partners that want all the benefits of owning hospitality and a hotel, a luxury hotel, without any of the headaches. So let me just see here. On a very, very high level, again, where we sit today is we have acquired our current 4.5 acre plot of land. There are 10 cabins currently running and generating cash flow. We have site plan approval to make that 21. We have purchased the neighboring lot, which is phase 2 right now, where we are putting on the additional 21 units. So from a cash standpoint, we have currently raised $4.5 million, and we are looking right now to raise the remaining $3 million for phase 2. This is a long-term buy and hold play. This is not a return of capital play within a certain amount of time. So this is to highlight something very, very important. One second. I want to make sure my throat isn't dry for this. Return of capital, in my opinion, is arguably the best investment strategy for those looking to defer and minimize their tax position. If anybody would like to reach out to me, I will send you a document that outlines the benefits of a return of capital investment, how it defers and minimizes all of your tax position and liability when investing in this kind of strategy or investing in this kind of real estate. And it also highlights the equivalent amount of money that you would need to put into a REIT or put into a stock or put into a fixed income asset that gives you X amount of return in order to match these returns. So it's very, very important that it's a tax efficient vehicle, but we are not planning to return capital. This is not an exit play. We are not building to sell. We are not building to refinance. So to get into the numbers, we are targeting a 30% internal rate of return, a 30% IRR once this thing is built and operational. And we foresee that happening hopefully within the next 24 months or so. I mean, we're already well underway with phase one. Phase two is the exciting addition to this already stunning property and stunning vision. And we want to invite American and Canadian partners to participate. My money will be in on this deal. You will be co-investing with me and in all the other projects that I brought to this page so far, into this group. And yeah, I guess like without talking your ear off and going around and around and around, what I want to invite those members that are interested to do is reach out to me. Send me an email. I'm very, very responsive. We could set up a one-on-one call. We can go through the deck line by line. Let me get the financials in your hand. Let me set up a meeting with the founding partners of this project. And let's figure out what we have to do to get you involved. And we can talk about all the benefits.
That's awesome, man. Hey, Jaden, I got a quick question. How many of these units will have like a big enough for a full family? Is it like a full house, or is it like a 2-bedroom or a 1-bedroom?
Yeah, it's a great question. So one of the 21 units, there you go, right there.
You're in New York, aren't you?
I'm in New York City for all my fellow Americans. I made the big change and the big move about 3 weeks ago. When I first met Noel and Tom, I literally said, I'm like, oh, I want to get down to the States. I never envisioned New York City, but there's been a lot of progression since I first was introduced to this group. And yes, a big life change for me is I'm now an American, or at least I live here. So pretty exciting. But yeah, you hear the sirens a lot in New York City. Apologies. Wow. So our accommodations feature currently right now 5 1-bedroom cabins, 5 2-bedroom cabins, 10 1-bedroom cabins in a motel, hotel kind of setup, like a larger building. And then we have 1 4-bedroom main house designed for larger families.
Cool.
Now, I mean, I think that a lot of your the members of this group lean on you for advice, and they leaned on me for advice, and they come and they ask questions of me all the time. So I'll be very, very transparent. This is a higher risk, higher reward play than typically what I bring to the group. Typically what I bring to the group are projects that are very close to shovel ready. They are committee of adjustment or, committee approved. We already have financing lined up with federal insurance policies behind it. We have longer amortization, and our strategy is to return capital ASAP and start getting you into a zero risk cash flow position. This is a little bit different. This is, you're investing into a brand, you're investing into a hotel. You're kind of investing into the partners behind it, which is, myself and some other pretty powerful Toronto investors and developers, but this is buy and hold. You need to see the long-term vision. Of course, you'll get your capital back over probably 7 years based on the IRR numbers, but this is a buy and hold play. You want to be involved in this brand as they develop this property, as they gain some success and traction. The cash flow and the returns are absolutely out of this world, but they have very ambitious plans to open up in Miami and open up in some pretty hot destinations in the States, but this is their flagship project. So it's important to note that of the $4.5 million that we have raised to date, a lot of that is with general partners money. So some of the names that I've even mentioned today, they have significant skin in the game, and that's important to know.
That's great.
Yeah.
That's awesome. So I know you said the numbers, just DM you. Would you have like a ballpark figure if somebody were to ask, like, let's say they were to invest, what's a minimum anyways? Is it like 100 grand, 50 grand?
We don't have a minimum right now. Being an accredited investor, the smallest, we've actually had a member reach out after I think I was on 3 weeks ago, 4 weeks. I was still in Canada, so it must have been 4 weeks ago. We already have some members that have signed up and signed an LOI, which is a letter of intent. So, which is great. There's already been some significant interest in this project, but your answer is 30 to 31% IRR. Sorry, I'm trying to share a screen with you again. 30 to 31% IRR.
Yeah, we can see the screen. Okay.
So that's your return. That's your annualized return. There again, there's no intention of selling, so there's no exit. The exit is through proceeds of operation, right, and continued growth. So I'm being told by the current partners that anybody that gets in on this deal will have the right of first refusal as they continue to build and expand the brand and expand their footprint across North America, which that alone is fairly exciting. So.
And from my understanding, Jaden, this is going to be like an equity partnership kind of deal, right, for limited partners based on the investment? Okay.
Correct.
That's awesome, man.
Yeah. So it's a total project cost of about $15 million. And okay. I believe the equity is totaling roughly half that. So call it $7.5 million makes up the equity of this project. Which would mean a $750,000 investment would get you about 10%.
That's awesome.
So those are very rough numbers. I mean, if I think everybody has different metrics and levers that they want to see pulled before they make an investment. So reach out to me with your specific questions and I can answer it. But the number one, in my opinion, the most important metric is your internal rate of return, and anything above 15% is gravy. So to be hitting 30% IRR on some very conservative numbers is incredible. Now, a lot of times cash projections are just that. It's just kind of, putting your finger in the air and kind of taking a temperature check. With this project, it's a little bit different. The bank has required us to get a third-party appraisal company. It cost us $90,000 to get the appraisal done for this property. And it was done by, again, that company, HVS. Look them up. They're an American company. They came in, they looked at comparable hotels in the neighborhood. They looked at average nightly rates. They looked at what we have been approved for zoning. They looked at the size of our suites and our designs. Not only have they forecasted that we will have the highest price per night, but they've also forecasted that our as if complete valuation will be close to $25 million upon completion, which is a $10 million equity bump. So it's a very, very exciting project. The returns are incredible. I think the partners certainly minimize the risk element. They certainly did for me. I've met with them. And again, members of this community have already signed an LOI, which has allowed them to see the private decks and get all the information. So that's, not a whole lot more to discuss on that front. I mean, if left to my own devices, yeah.
Yeah, so I'm looking at it this way. Like most of the returns, we look at IRR as in 15s, 16s, 14s, and this one is like what, 31%. So I think
I'll tell you why it's so high. I'll tell you why it's so high, because so far a lot of the money has been spent on the infrastructure for phase one, running services out there, approvals, lawyers, land transfer taxes, interest expense. All of those soft costs are associated to phase one. Phase two, this additional 3 million Canadian we're raising. So if there's any Americans out there, just for easy math, that's like 2.2 million. You could own 50% of this deal. So American money goes very, very far in Canada. I strongly encourage any American that is looking to deploy capital and looking for a high RRR, give me a call. This may be the project for you. It may not, it may be. But the reason why the IRR is so high, Noel, is because phase two, where we're raising this money for right now, it's just to add the additional 21 units. That's just for the
When is
construction
the
cost of the 21
project? So what's the project? What is it scheduled to start, and when is it scheduled to be completed on the phase two?
Yeah, that's a great question. Well, we're waiting to raise the capital before starting
Got
as
it.
part of
Got
the
it.
requirements for the construction loan. So we estimate December 1st is when we're closing this round of funding. So we
Okay.
have the next 70 days that we are going out and raising from similar groups like this, giving them the first look before we put it out to a company that perhaps wants to raise for us. But yeah, December 1, I would imagine we'll close the round of funding and probably start construction in the spring.
Awesome. Awesome. Well, I mean, I think Jaden, that was a pretty good presentation there. So, ladies and gentlemen, if you guys have any questions, hit him up at Jaden Haywood. I'm going to be putting up his little tagline there underneath in the comments below. And if you have
Yeah,
any
yeah, yeah.
questions,
My email
DM.
address, I'll just give my cell phone number. Anybody can call
Yeah,
me. Yeah, I'd
100%.
even take them up to site if they really wanted to. If there's a serious investor like an American that has, like a million or anything significantly over a million, then we'd happily fly them out to site. We can meet with you on site. One of the partners has a plane, so we can arrange transportation. We can take you over there, show you the current 10 unit that's on the lot, help you fall in love with the project in the neighborhood over a dinner and a glass of wine, whatever, show you the neighborhood, and then we can show you how this investment will be right for you.
Great. That's a great opportunity, honestly. Alrighty. So with that being said, anybody, any questions, any concerns, whatever, just hit us up, and of course we'll be more than happy to answer. And we got Jaden. I'm gonna put Jaden's contact info in the chat and also in the comments section as well as in the whole post. So let us know, and what do you guys think? And of course, Jaden's going to be more than willing to kind of share all the details with you. So with that being said,
Yeah.
Great
Yeah, and I'm happy to
opportunity.
jump on in a week or two as well. I'm happy to jump back on and do another, maybe when Tom's back, we can do another one of these and give everybody an update as to how much money we've raised from A to B and kind of go from there.
Yeah, let's do one in about a couple of weeks, and let's go from there.
Sounds good, my
Alrighty.
friend.
Perfect. Sounds good. Hey, thanks so much for coming on, man. Really appreciate it for this opportunity to present it to our group. And from there, we are going to be landing this plane, and make sure you guys like and ask away with any questions. Alrighty. So